What is up, everybody? Solomon here. Super excited to be with Genfinity, interviewing a multitude of builders across Web3. Today, we're joined by some of the biggest players in all of the blockchain and distributed ledger space. Really excited to have Martin from Curve DAO with us today, as well as Lance from the XDC Foundation. Curve has recently integrated XDC Network, and they're reshaping liquidity. I'm sure that there's plans for USDC, as we know that native USDC is coming to XDC Network as well, and we're going to be digging into real world assets certainly as well. But I want to kick this off with maybe some quick guest intros, so maybe 30 or 45 seconds on both you gentlemen. Martin, you're the guest of honor today because I've never gotten to interview you before, so I'd love an intro of yourself and tell us what you guys do at Curve.
Yeah, I'm on chain like since ever, more like 10 years basically, and I've been an early LP to Curve because this time you couldn't do anything with your funds except being in LP if you had like stable coins on chain, and so I got the airdrop. But then, so I know like a lot of people from this time, but I joined like Curve like 2 years ago, and now I'm doing BD. Even I have like a tech background originally, so I'm deep on chain guy basically.
Awesome. Well, yeah, I think we've all, well, some of us, it's probably right around the same time that I got in, was basically all that you could do in decentralized finance was create a liquidity pool token and figure out about all the fun stuff that you figure out sometimes the hard way after that. But we've definitely come a long ways. Lance, I would love if you could do just a quick intro of yourself from XDC Foundation stance.
Yeah, it's been a lot of times, it seems like already, that I've been on here. So I'm sure some are familiar with me already, but my name's Lance. I work with XDC Foundation in ecosystem development. I was excited about Curve and obviously a lot of other things. So I'm excited to hear a little bit more about Curve and get into some of the conversations we're going to have here over the next, 30 minutes or so maybe. So, but thanks for having us on again, Ryan. It's good to see you.
100%. So I guess we'll kick off here, and I try to keep things simple for people that listen. I think sometimes we use a lot of terms in blockchain and crypto that sometimes don't translate over. But Curve is one of kind of the largest decentralized kind of platforms, liquidity platforms in the entire world. Certainly a backbone of stablecoin liquidity. I would love, Martin, if you could maybe, just for anybody new that isn't in this space, can you talk a little bit about what Curve does and why Curve is so instrumental for adoption, whether it be stablecoins or whichever route you kind of want to take it?
Yeah, so back in the days, Uniswap was like a full range AMM, and the issue is as soon as you feel like stablecoin in a full range AMM, as soon as you make a trade, basically the price, if you have $2 in it, as soon as you make a trade, the price is not at $1 to the other dollar anymore. So you need a lot of liquidity to trade. And this is the reason why the founder of Curve invented the stable swap, basically, who is a different way of AMM, which keeps basically the peg very close to one. Basically, was like the entry point. And then, of course, Curve developed other things like stablecoin, the lending protocol, pools for non-paired asset, and basically. So at this time, stablecoin liquidity has been there some, but of course, stablecoin, even then we had different versions and you want to trade them in a good way, and so stable swap has been invented basically.
Awesome. And I know recently, let me see if I can navigate my screens here. You guys recently integrated, and I guess I'll ask both of you gentlemen on this one, but I guess as a sidebar, like, I think it's really interesting what's going on with stablecoins, and I think that in blockchain and crypto over the past couple of years, I think that development has gotten a lot better at kind of abstracting away the technology, making onboarding a little bit easier. But I think what's really going to be interesting is stablecoin kind of doing that job for onboarding people, getting people comfortable with the technology. At least that's my thought process. But I want to kind of ask about this. This was a more recent announcement. This is back in June of this year. Curve now live on XDC Network. So maybe I guess I start with you, Martin, on what what this integration looks like, why XDC Network, and then I'll move over to Lance as well. But Martin, I guess just kind of your thoughts here on the integration, and congrats, by the way, on the integration.
Thanks. So yeah, we integrated to different EVMs and also now to XDC. And one of the reasons is I think we can pick winners, in a way, because you don't know which chain is going to be the future, because innovation sometimes is very random. Basically, that's one of the reasons. I think XDC is a good place to be. The other thing is that we are mostly focused on the dev team Europe. So, and I did see that XDC has some Eastern community basically, which is interesting for us because of different reasons. It's a huge user base we miss. And yeah, basically this is the two reasons to be there. And in a way, we also have to convince, it also depends where you have another end. Basically, if you start a conversation, and with XDC, we had like a good conversation from somebody who's not here now, who did well understand what DeFi is and what it's needed. And so it's also, some part is also like a trust decision. So if you see good people on the other side, then yeah, it makes it easier to decide.
I think it's definitely one of the things that is so important in this space is that the networking aspect, and really everything for adoption is kind of across the board is like a trust building exercise and getting to know the people that you're kind of working with. Lance, I would love your thought process and just what an integration like Curve represents for XDC Network.
Yeah. Well, I mean, obviously, a lot of the team, or handful of the teams, behind the XDC Network, have made liquidity a big focus, over the past year and a half or so. Obviously, there's a trade finance background with XDC Network, and even RWA before RWA even got hot. But really, one of the issues or things that needed some focus was liquidity. And obviously, with Curve, one of the biggest platforms and projects for liquidity. So it was kind of a no-brainer. I'm pretty sure I probably know who it was from the team that made this happen. Benny, I think he's been on here a couple times. I know he was involved. He's been pushing really hard for DeFi and liquidity on the XDC network, and he's been doing a pretty good job crushing it. But I think one thing that's been a good recent development is the native USDC on XDC, and that's been a big focus too. So it's good to get that out there for the community and let everybody know that that's going to be here within the next, I don't know, not too long. It's already been announced by Circle, which leads me to really like a question that I have for you, Martin, and is just the importance of having good stable coins on the network, right? And Ryan, you mentioned this already. Stable coins really is a good entryway for not only just liquidity, right, but for new users. It's something that's kind of easier for people to wrap their head around, easier to use. Even in the RWA space, when you start talking about getting custodial partners and purchasing on-ramping and off-ramping of RWAs, most of it has to be done in stable coins, right? A lot of them want to do it in stable coins. So just talk about the importance of that. Is that sort of I guess, not necessarily a requirement, but it's something that you really have to have in your ecosystem if you want your ecosystem to flourish and have liquidity, right? Like good stable coin, whether it's native USDC or something along those lines. Can you just touch on the importance of that?
Yeah, I think, if you look at the evolution of blockchain or the protocols on different blockchains, yeah, stablecoin is basically the product market fit per definition, somehow. It has not been there all the time, but since now DeFi got big on stablecoin partly, basically. And stablecoin is also, it's consumer friendly, because if you have an exotic asset who makes deviation for 20% a day, that's not really, your good entry point. And so I totally agree. This is one stablecoin is like vanilla, basically, usage of a blockchain. And we see, now how stablecoin TVL is growing across the board, basically. And so it's some kind of infrastructure you need as a chain. And Curve directly plugs into this. We also see partly us as an infrastructure for liquidity at the end. So we also try to be neutral in the sense that we don't favor some stablecoins or assets over others. because as a marketplace, and we are a marketplace, you should be neutral and welcome like everyone, basically. So this is also reason it's permissionless. So yeah, I mean, I just highlighted that in the sense that everyone can open a pool. Most systems in a TradFi are permissioned, but with Curve, basically everyone can open a stable pool. So you can make your own stablecoin if you like, or any asset, and pull it to some other stablecoins anytime, basically.
I think as a like a quick sidebar here, and you mentioned you kind of have to be agnostic and be able to integrate based on how the market's innovating, I guess, is, you know, for lack of better phrasing it. And the past couple of days have been even pretty interesting from a stablecoin standpoint. You've got I'm probably going to get the acronym wrong, but I think it's USAT through Tether, and then today, like, I'm literally looking before this podcast, and I see that I think MetaMask. It's like I can't seem to keep up with what's going on. I wanted to give a quick nod to XDC, USDC natively coming to XDC. I think that integration from a USDC Circle standpoint, and I want to say, what's the cross chain? Is it CCTP?
CCTP,
yeah, that's coming as well, and that's still within the teens. There's not a ton of networks out there, but Martin was mentioning permissionless pool creation. You know, I kind of want to ask, maybe Lance, maybe you start us here. What Curve brings to the XDC network, and I have it up on the screen, but I guess, you know, you're probably best served at talking about it, other than people trying to understand what they're looking at here. So, I mean, just in broad terms, what does this kind of represent? What can people do now?
Well, I think you know, you can look at it both ways, right? I think obviously it brings the opportunity for liquidity, right? And I think that term gets thrown around so much, you know, bringing liquidity or having liquidity. And I think people don't necessarily understand the process, I think, of like what is all involved in trying to actually make that happen and what liquidity actually is, right? So Curve brings the opportunity to bring on liquidity easier, right? It creates the opportunity to bring on liquidity. So, and not only that, but with more liquidity coming on XDC through Curve, it introduces the XDC network to other users of Curve that are maybe liquidity providers or leveraging liquidity within other ecosystems, right? So it introduces the XDC network to those users, and vice versa, you know, the other way around. So it's important to have methods of bringing on liquidity with something that's also trusted, because it's one thing to bring on liquidity, but being a liquidity provider is something that you trust, you know, using for liquidity. And obviously Curve has a reputation of doing it over an extended long period of time, obviously, right? So I think that's really important. So it's the opportunity to bring on liquidity, introducing it to other communities and ecosystems, and then also just having a place to onboard liquidity in a trusted, you know, marketplace, basically.
Let me just a real quick follow-up for you, Lance, because I think I've done so many interviews within the XDC ecosystem, and one thing, you know, consistently resonates, and obviously there's many use cases we could kind of go down the rabbit hole with here, but I'll talk about like trade finance, tokenization of real world assets, trade finance, things like that. And I think one of the things that has been said multiple times is like, look, you know, anybody can participate in these anybody can participate in trade finance. At least that's the future we're moving towards, as long as it's done compliantly and everything else. Right. So when I see like permissionless pool creation and things, you know, it seems like it's going to be much, with deeper liquidity, it will be much easier for enterprise institutions, whoever it may be, to participate in trade finance initiatives or whatever initiatives they may be. Is that kind of the correct assumption here?
I mean, definitely. Even if it's not necessarily directly involved in liquidity directly to the trade finance, you know, solution or product or whatever that is, having native USDC on the XDC network, and then having it available on a marketplace like Curve or somebody liquidity pools, it indirectly, or really more directly, I would say, brings liquidity onto the ecosystem. You know, whether that be through USDC or maybe some other route, and you're not going to really attract more users, even in trade finance or RWA or whatever that is, if your ecosystem isn't liquid. You know what I mean? So you're not going to attract more users if it's not liquid. So obviously, bringing on more liquidity, even, you know, through Curve or the USDC, you know, stablecoin or whatever that is, brings more liquidity to the ecosystem, which will make it easier and more attractive to have more trade finance, solutions and products on the XDC network.
So I have a follow-up for Martin from the stablecoin standpoint. Is I've seen how, like, I always like kind of the documentation that comes out from some of these entities about like estimates of, I'm not going to get into crypto market estimates, but I am going to kind of maybe throw around some of the stuff that I've seen with stablecoins. And I know, so for example, there's a Treasury Borrowing and Advisory Committee basically put out a document about a month and a half ago estimating, if all things go well, that the stablecoin market cap could be somewhere around like $2.6, $2.8 trillion by 2028, 2030 or so. I guess, number one, that's pretty crazy to even like think about, because that's like 10x where stablecoins are at right now, but I don't think we're far off. I guess the real question I have here is, being that Curve is kind of the backbone of stablecoin liquidity across these markets, what role do you see Curve kind of evolving into for tokenized real world assets? How do stablecoins, play a role in that over time? Because I feel like we're very early in that game still.
Yeah, I think the question is where these stablecoins live at the end. Of course, we see a lot. Yeah, we see TVL on chain growing, but stablecoin can also be used in venues where we don't see it on public chains, basically. And our task is basically to bring it onto public chains, because then everyone can basically profit from this. Otherwise, it's just siloed again. And I guess one of the things we are here for is bring this on chain. And of course, having Curve on the chain helps with this. And also to highlight, it's exactly the same code as on mainnet. So, and this is also, it's about trust, because if you provide liquidity, it's about trust, where you bring your liquidity on, and the perception of the market of the liquidity is always a cost, basically, because it's an opportunity cost. Of course, you can park your liquidity in a pool, or you can have it in a treasury bill, and then you make some revenue out of this. So at the end, we have to beat like other places where you can park your liquidity, basically, and that's one of the goals. And what we see interestingly in this cycle is, because it's more and more stablecoins are coming on chain, we don't see these huge spikes anymore, because I consider us in a moment in a bull, or we are in a bull, and the rate is not so high as in last cycles. And this is a good thing, because in a way you have to compete with the landing rate on landing platforms, because as a stablecoin owner, you say I can provide liquidity in a pool, I can lend it out for, and the rates at the end have to converge on all this market, because it's very, very liquid at the end. You look for opportunity where to park your liquidity, and then you park it there where you get the most revenue, basically. And seeing the rate coming down, it's a good sign for everything, because we did see some growth pain, because if you're a fresh protocol and you come out in a bad moment and you need to pay 15% for your stablecoin liquidity, that's a lot of money, basically. And I think it helps us to grow. Well, everyone helps to grow. So it's some kind of normalization, basically, coming this amount of stablecoins on chain, and it helps like everyone. Even you as insider, you can't farm stablecoins for 15-20% up here anymore. That looks like it's over, but at the end, I think everyone will profit in the future.
I have something I'd like to kind of a question to ask on that, because I want to talk a little bit about the traditional finance versus kind of what Curve does in the crypto industry and ecosystem, as a whole. Because you're talking about rates being more competitive, right, and even returns and yield being more competitive for people, and more competition there. Competition obviously creates new opportunities, right? It's good for an industry. And when I try to explain a lot of these things to family members that just have their money sitting in a savings account getting 0.25% interest, and then you sort of introduce them to the way things are done in crypto, because things are getting a little easier, a little better. I guess the question that I want to ask is, do you think that we're far away from, because I feel like once people get used to the way we kind of do things and see the competition and the rates and the yield that you can get, nobody's going to want to just park money in an old traditional savings account anymore when you can make your money work for you. And I guess I just wanted to ask, like, how far away do you think that we are from the majority of people I guess, realizing that, and then the traditional methods finally realizing like, okay, we have to evolve and make things better and more competitive, or we're going to get left in the dust. Where do you think we are in that kind of
Yeah,
evolution?
we did see some regulation which is not in a way, maybe it's just, yeah, we did see some regulation which is like it's forbidden to give yield or interest rate back to stable coins only if you're Genius compliant, also MiCA compliant. And this is basically it's good and bad for us in a sense, because this means if somebody holds a USDC on a chain, he cannot get like a kickback or rate from the treasury bill they held. And of course, it's protecting their business, you know. So Circle has been able to leverage regulation to protect their own business. So, and I think in a way it works, in other way it doesn't work, because of course there are other products out there who are more decentralized and they find ways to give much higher interest rate on stables somehow, the decentralized one, but also some are like in other jurisdiction they can have other regulations. And I think now the entry point now is coming from these big players, but at some point maybe the on-chain real world forces them to give back more reward to stablecoin owners basically. And I think that's how it will evolve. Of course, I think it takes more time because at the end, we have to solve. We are long. I'm long term in this space, and sometimes I think it feels natural, but for myself, every time you have to make transactions somewhere, it's not scary anymore, but in a sense that you say now you have to cost your own money. This is a huge step for many people, basically. And we will see other products who help with this, and I think they're evolving, and maybe they make things easier. And what we see, and I think it's a little bit desperate, I did read that banks now they tokenize bank deposits. So for me, it's a strange concept. So basically, as soon as you send money to your bank account, and then they tokenize your deposit somehow, and then you can, I don't know what you can do with this. Basically, you can pay somebody else because it's still owned by the bank. So I don't know how this market should work. So this is basically a desperate answer of the banking system, and we put
Yeah.
pressure on them, I guess. So they have to change. We will see.
Yeah, well, that's
So
what I like about it. Like things like Curve and others. It creates good opportunity, and I feel like the more opportunities and bigger it gets, the more pressure it can put, on the Web2 world. So, good point there. Go ahead, Ryan. I didn't want to cut you off.
No, I mean, I think it's a good point. There's kind of a bunch of different ways I could go here. I think one thing that I keep bringing this example up when it applies, when I get a chance to in these interviews. A few years ago, they were teaching my oldest daughter, and I think she was probably maybe 7th or 8th grade at that point in time, about the way that savings accounts work in the United States. And they told her that there's literally in school, they were like, the reason you keep your money in a savings account because the bank has a vault and that's where your money goes. And I told her, I'm like, I want to see this vault because I'm not buying it. But to Lance's point, and I kind of want to ask you this, Martin, and I think that, the idea here over time is truly kind of this democratization of finance. And I think the power of blockchain and Web3 is that individuals like myself and like normal people out there are going to be able to participate, not only banking the unbanked, but be able to participate in things that normally only the ultra wealthy kind of get the opportunity to do, whether that's portfolio management, whether that's yield opportunities and things. So I guess I'll maybe ask a similar question, but I'll reframe it from an education standpoint. Like, how much work do you still think that we either have to do from an education standpoint or from abstracting away complexity from a tech standpoint for people to kind of maybe not understand what's going on, but like feel comfortable enough to kind of use the tech? And I'm sorry if I recycled that question again, but yeah.
You have to, yeah. I think finance education, as you say, also I'm living in Switzerland and we have a financial industry basically, but in schools, basically financial education is like non-existence really it's crazy. I don't understand why it's the case, and I think in a way this maybe is also adoption might hinder adoption, because in a way you need like people who understand what they're doing, and I think it's also a good way to learn about finance, in the sense that you can do things, on small scales even, which you never can do on other places. You basically can lend out your assets like anytime in some lending markets. You can, trade hold currency in other UHs, other place, or US dollar. And what of the huge, I live in a quite stable environment, currency wise, but we don't see many people have like very bad local currencies, and they hedge back in US dollar. It helps them really to get, to not get diluted basically
Yep.
in the local currency. That's a huge case for them. And this also is like it forces people partly on chain. Part of the people are just because, and also the efficiency we see in this system is just very, very high. So this is basically the how to say, the killer app basically is the efficiency gain you have with kind of with on-chain things. And this basically can't ignore, in a way it's like, I struggle, we think about TradFi, how we should help them, we as like Curve. But at the end, the selling pitch is not so hot, because the selling part in a sense is, if you don't do it, somebody else is doing it.
Sure.
You can either you can start now and learn things and get better basically to be future proof, or you basically can refuse, but somebody else will. And this is not, it's not like the
So I want to
juiciest
ask.
pitch to
Let me
sell.
let me ask.
Sorry, I lost track in the original.
No, you're perfect. That's fine, because you lead me in, because both of you guys talked about this briefly, and we might run over a little bit. I know I said 30 minutes, but this is a pretty good conversation, maybe like 10 minutes. But I want to ask both you guys, because you both talked about it, and I think it's relevant. Martin, you mentioned, that the hope obviously is over time that, the goal is kind of the public networks, and not just to kind of reinvent silos with new technology and all this. I think, Lance, appropriate discussion here. I know last year for you guys, I think it was 2024, XDC 2.0 and subnets, and getting some of these enterprises and institutions comfortable with the technology. I guess from both your guys' standpoint, because both of you guys have been here a little while, have we seen an evolution of enterprise and institution getting more comfortable with I don't even want to say technology, getting more comfortable with solving problems with the technology, to potentially eventually, migrate some stuff over onto public networks versus building in, silos and all of this? The question is pretensed under, obviously there has to be a level of compliance, because that's kind of the whole reasoning why some stuff has to stay private and some stuff is public right now. But sorry to be long-winded, but Lance, you kind of get what I'm asking? Or
yeah, no, I get what you're saying. It is that hurdle of the trust of using the technology there, or is it in a better place? It's basically what you're asking, right? And
sure, yeah.
I would say yes, for sure. I think it's also that traditional industries are a lot smarter at what they need to look for, as far as like how it's used, whether are there a lot of developers within the ecosystem, that can be a sign of, trust and reliability. How long has it been around? What are the sort of the communities, the current user base? Has there been any technical issues, et cetera, right? Who is involved with it? So I think companies are just a lot smarter now at how they judge whether it be a blockchain or marketplace or whatever that is. And now with it becoming such a hot topic, it attracted more into the industry. And then now there's more competition. So I think the trust aspect of it isn't as much of a hurdle anymore, in a sense, because like I said, they know what to look for now and to gauge and judge, whether it be a marketplace, DApp, or blockchain, or whatever that is. So yes, I think so.
Yeah, I can just add that I also think, it's for institution, it's basically stablecoin is also a good entry point for them, because it's also a product everyone understands basically. And crypto before was basically a volatile asset to go up and down all the time, basically. So I think also for institutions, stablecoins are a good entry point because they have, if you have the trust thing solved, and I think we are at this point which we see the influence stablecoin. The main reason is, the trust issue basically has resolved in a sense. People really think it works now and they use it. So it's like, it's also a good entry point for them to make their experience and then maybe, go up the risk curve with other things they want to try on chain, basically.
It's an interesting, I think that's a super, and that's kind of the thought process that, like, I have a little bit with, like, I know like I mentioned earlier, we talk about abstracting away, complexities and onboarding into the space, but I really do think that stablecoins are like the perfect thing to kind of get people used to blockchain and distributed ledger. Like, I just imagine, especially with clear-cut regulations, people start using stablecoins more often in their daily lives. And then, like, okay, if I'm using a stablecoin for 6 months, it becomes that much easier for me to be like, oh, I'm doing the same thing. Maybe I can do something else in this space or try something else out. Lance, I wanted to ask you if you have anything. I was going to ramp us down here to not take too much of everybody's time up. If you had any questions, I want to make sure we definitely get to those.
No, I'm good. Yeah, I just give Martin an opportunity, or unless you have one, Martin.
Yeah, yes, please, yes. No, I just want to take the opportunity where Curve is heading, basically.
Yeah,
and
please.
We have been looking for non-FX market, basically, and we had always had the feeling FX market must come on chain at some point, and we did see until now is some kind of hyper-dollarization. But in a way, now we see things moving, and I guess also, like, if you have communities who are in other live in other places in the US, for them it's quite interesting to use their local currency to go on chain. And now we're just going to release, we call it FX swap, basically, and it's iteration on it's not a stable swap, it's for low volatile pair. And the good thing about this is, if you look outside of crypto, most of it is low volatile, so we can use it for real world asset and pay it to dollars, or FX is just a good example. If we will see future non-US dollar stable coins, and in a way that's where also our innovation is heading to. And we have a new product who we will roll out on every chain at some time, who will help tackle these markets, because we see there's demand for this kind of real world assets and also, of course, non-US stable coins coming on chain.
I think that's awesome. And I think you answered my last question, Martin, about what you're excited about for the future, but FX swap coming to Curve as well, alongside all of the other kind of amazing initiatives that you guys have. Lance, I'll ask you the same question, and Martin, and we'll do closing thoughts here real quick too, so that if there's anything we missed. But Lance, what are you excited about for the next handful of months? I know that, as we kind of talked about earlier on, USDC coming to XDC is like imminent, and congratulations for that, as well as CCTP, which is kind of the cross-chain initiatives. And then in June, announcing the Curve integration, which, these things tie directly in together. So what are you most excited about for the next handful of months, next year, whatever it may be? And then I'm going to ask you the same question again, Martin. So go ahead, Lance.
No, just I'm excited about to see what pulls and what methods users in our ecosystem use Curve, and also bring in liquidity, and then also to see the growth from other communities that leverage Curve or use Curve to maybe give our ecosystem a try, because of the variety, I feel like, of real world assets that are going to be coming onto the XDC network. So as I said before, it's an opportunity to bring liquidity on to XDC. So I'm excited to see how that evolves and grows in the coming months and over the next year or so.
I'll ask you, maybe I'll reframe, because we know, as Martin mentioned, FX swap is coming to Curve, and that's certainly going to solve some pretty major pain points. But maybe what are you most excited about for the next handful of months, whether that be this kind of space as a whole, Martin, or it seems like we almost see a new entity launching a stablecoin every single day. It reminds me of 2018 with some of the blockchain rebranding and stuff. And I'm sure from your guys' end, it's probably a really good thing to see. But I'm curious, what are you guys looking forward to kind of broadly here?
Yeah, I think what we try. We have different products. We also have a lending market, and we're currently improving this one too, because we had the first iteration, and this always also a learning process. And I think what we will see in the future also for Curve, we try basically to make it more easier to use complex products, because some of the complex we have, or everyone has, DeFi has some complexity, and I think it's our task to make it more user friendly, that people can seamlessly use these kind of products. And I think that's where we're heading as a overall industry in a sense, because somehow if you look at the design space of different if you look at AMMs or liquidity pools, it's not done yet. You can still like do things, but at some point it gets harder and harder to I would say evolve or innovate on this. And we still try, and we do, but somehow I think the overall task of DeFi as a general is to make it more user friendly, and also maybe to show people more, where's the risk they're taking in interfaces and these kind of things, because this directly reflects back in trust. Because now if you look at the major interface, most of them just show like tokens, and if you don't know the token, we know the token, you go in the interface, you see all the tokens, and you see the icons and you know what it is. But in a way it's strange, because every like normal stock trading interface has like, okay, that's trading phase, but then it has news and other things, and I think it will evolve in this direction.
Let me ask you maybe a quick follow-up here, because I think you bring up a really interesting point about user experience. I've brought this up before, and I think it's interesting, because like every single person in the entire world is going to have a different I would say needs a different user experience, because they all have different financial situations, they all have different jurisdictions that they're living in, whatever it may be. I also think we're at a very interesting time as human beings, where we have a lot of different technologies seemingly converging at one point in time. Like, so obviously the low-hanging fruit is like agentic AI and artificial intelligence, but we also have like DID, decentralized identifiers and stuff kind of tying in. What role do you think that's going to play, Martin, for you guys with what you're building at Curve to make that user experience A, more better, and B, more personalized, as we see agentic AI and DID and stuff all converging in?
I'm too much for a boomer for this kind of question. Somehow, I was like, I was referring to AI in a way. It's like you trusting somebody who read all the books in the world but never did go outside of the room. So I think it's still it's powerful, and we use it all daily. Me too, but so it's like I try to wrap my head around this, and I think there's potential, but there's also like this gray area which you think it will work. The thing with that is it works most of the time, but sometimes it just doesn't, basically. And then this is like very it's painful, and also also from a brand perspective, integrate this and then it works most of the time, but sometimes it doesn't. How does it reflect on your brand value? And so it's not easy to integrate this into this. Finance or blockchain itself is a very, very hard technology in a sense. It's like hard to build, and it's unforgiving if you make errors. And AI is soft and fluffy, and I think it's hard to see where we move on.
Yeah,
Of course,
I agree.
When I think we're still at a point where definitely, they better get it right, because if they get some of this stuff wrong, it's going to be I wanted to mention, please make sure, for those listening, go and give Curve a follow at Curve Finance. And also, you can check out more about all of their news in their blog, news.curve.finance. You can learn more about the integration with XDC Network as well. Make sure you guys give XDC Foundation a follow at XDC Foundation. And thank you to XDC for supporting these podcasts. You can learn more about the USDC integration at genfinity.io. And a huge shout out to Martin from Curve DAO for joining today, talking about all the amazing initiatives going on with tokenization, real world assets, liquidity, deep liquidity, DeFi, and all the things that are really driving this space forward. The stablecoin initiatives are really interesting to watch, and certainly Lance as well from XDC Foundation. And thank you guys very much. Hang out with me here for a second so I make sure I get these recordings, and appreciate it, guys.
Yeah.
Thank you.
Thanks for having us.